Okay. So we are moving to net realizable value. Now, in net realizable value, you might be given or not. So it might be that the non-current assets, the realizable value is still the net book value, but you might be given. But in this question, you were given. So what's the
I don't know what you just said. Now, can you tell me?
Now, when you are dealing with net realizable value, meaning that if I sell all my assets, how much will I realize? Is net realizable value. My receivables, you see that that's most of the time. Most of the net realizable value, what is usually affected is only non-current asset, stock, receivable. Nothing must happen to my money in the bank. How will I have? I want to close down my business now. I have 1 million in my account. I'm not telling myself that my realizable amount that we realize from the bank is 800,000. What happens to my 200,000? It's not possible. I have to get all my full money back. But this one is receivable. Receivable means what? Debtors are owing you. So some people can go bankrupt. So you might have bad debts. So you have to make provision, even doubtful debt. It can also affect what? Stock. It can also affect what? Non-current asset. Because the car you bought for 15 million now. Let's say next day if you want to sell it, you are closing down your business. You might not sell it for 2 million again. Bought for 2 million, you cannot sell it for 2 million. So it's going to affect it. That's why most of the time they will give you those values. So in this question, we're giving those values. So we are going to use them. So I'm coming. Let me just give them. Okay. So just give me the value. Now, in the former, the one they gave us in the former question, it's the same question we are doing. So now, our net current asset was what before? Net current asset. Non-current asset, non-current asset. 1 million, 300,000. How much is it now? Under realizing, like, if we sell it, how much will it be? 900,000.
So we are dealing with this method now. We have to be using the realizable value.
Yes.
Exact.
Yes. You will only use exact if they do not give you the realizable value. You only use that. Oh yeah, now the next one, stock and what?
We have that 1 million, 140,000.
Okay. Yeah. The realizable value.
Yes.
What was it before?
It was 1,000,000. There's 1,800.
Now it's what? 1,000,000.
140,000.
Will our receivable increase?
The stock and this thing. The stock and what we do. But we don't have the value for receivable under realizable value.
Yeah. What
stock and what we do, it increases.
It went up, I think.
Yes.
Okay. Maybe probably the bad debt we're able to cover is like where?
1,140,000.
1,140,000. Okay, now receivables, we need to be careful here because in these receivables we are saying that how much are we going to get back? Like how much? Let's say we've sold goods and stock everything of like 1 million naira. We cannot say we will realize everything. That's in the ideal sense. We might not be able to realize everything. So that is why we need to make provision. So we need to look at how many percent of the realizable value will we not get back. So in the question, you can assume that it is what? 2%, 5%, or 10%. Do you understand? Do you have any question on that? You can assume. They might not give you anything, but make sure you write a note that realizable value 2% because now I'm going to do workings here now. Workings. So workings 1. So when I want to put my value here, I'll put workings what? I'll put workings 1. So now my receivables there is what? Normal receivable. You know they don't tell us anything about the realizable. 1,490,000. So let's now assume that we will not be able to get 5% back. We can't get everything back. Let's say 5% is we are going to make provision for 5%. So now we are not going to ask ourselves if I'm going to be making provision for 5%. Normally, if I'm to get all my money, I'm supposed to get 100%, abi? Now I'm not making provision for 5%. So how much percent do you think I'm going to get back? 95. Meaning what? 100 minus what? 5. That's 95. So then I can say 95% times this 1,490,000 to get how much I'm going to put here. Now it's going to be, then I can say 100 minus 90% times of 1,490,000. Okay, sorry, 95. Let's just, well, remember that when you have to put note that you use 5%.
But is it compulsory to like take a certain percentage and receivables?
It's not compulsory, but for the market to know that you know what you are doing, because you can never realize all your receivables. It's not possible. You want to put gun to their head. The only possible is to put gun to their head. No, you collect my money back. No, it's not possible. So, and in an ideal sense, it's possible. So that's what 95% of what 1,490. So which is what 95 over 100 times 1,490. So what's the value?
1,450,500.
150,500. 1,415,500. Now, what about my bank? Nothing must happen to my money in the bank.
So that one is 316,200.
316,200. So when I add this together, what will I have? Add these two together. You notice that we don't put non-current assets, non-current liability. If they give us non-current liability, we put it there. One day.
Since we can't pay for that, we can't also put that. It's not going to be our pay.
No, you can't take that to the supplier. No, the only thing supplier can do for you is to give you discount. Yes. How will you be telling you supply me goods now? I'll not be telling them you cannot receive all your money.
I'm putting that now.
Which you are doing, what's my business? What's my business? It's not my business now.
Yeah, 2 million.
2 million.
871,000. 71,700.
71 like that.
87.
Over 8.
700.
700. So when I add this together, what do I have? Should have going to be the place.
3,771,000.
3,771,700.
700.
So now these are our total assets. Now what about payable that you add? How will you be telling supplier that you will not collect all this money back? It's not possible. But for supplier too, if supplier is going to go bankrupt or insolvent or is having issue that want to liquidate, he will also say that I may not pay back to in his own account. But in my own account, I can only do that for my own customer. He can only do that to his own customer. So I cannot be dictating for my supplier that I bought something for 500. Sure, you cannot collect 450. You see that I'm going back. What's my business? As a supplier, what's my business if you are going back? Or you are going to be liquidated? No, I don't have issues with that. So now, what was the payable?
So our payable is 1,507,000.
1,507,200. So what is our bank overcharge?
1,775,000.
705.
725.
725.
800.
800. So when we have this, what do we have?
3 million.
3 million. 233.
Yes.
Now, when I subtract, what should I have? Should I have less than 500, right?
We have 538,700.
538,700. Now, this is value of the entity. What am I going to know? That before that question, the same question we did, we already got that our number of shares was 100,000. So if I want to get value of entity per share, will be equals to what? 538,700 over what? 100,000. So what will I have here? I should be having 0 point something. Please confirm this one. Let me confirm this. Hmm?
5.387.
Yes, correct. So now
5.387.
5 points. Wait, that time that we divided, that one was 900,000. Now, naira per share. So that's that part. Now,
You don't have to like put like notes.
yes, you have to put notes of this working that okay, I use 5%. Yes, for my
The
receivables.
assumption has to be there.
Yes, it's an assumption. They are assuming. So, do you have any question?
So using this method now, let's say you have something like goodwill. You know it's part of the current asset.
Yes, it's part of non-current assets. So now if you have goodwill, now the reason why we can even say we want to account for goodwill is if, you know, if when we are doing partnership, the only reason why we account for goodwill is either we have a new partner or the partner is going or want to, no, they have said that one, they want new partner, a partner is going or dissolution of partnership. Now, the reason is because we want to know the exact value of the company. That is why we are doing this. So for me to say that, okay, we are going under liquidation, that the company wants to liquidate now, I need to account, so it is not compulsory. You can either put the goodwill there or not. It's not compulsory. You understand? If you want to put it there, you can put in an assumption that adding goodwill, it doesn't affect it. Because normally we need to put the goodwill. Like now, the explanation of goodwill is that if you use the example of Dangote now, that name is trusted by customers. So when you want to buy that name, that brand name, that company, you are not only buying the inventory, you are buying also the customer, you are buying the trust. Yes, you are buying his trust, buying everything. That's why even if the company is worth like 50 million and they say 75, you can say okay, that 25 is what? Is the goodwill. Because you are buying the goodwill with the value of the company. So you can add it or I don't want to add it. So it's just, are there any other question? But you don't add goodwill when you are doing historical cost and historical method and replacement. You only do it because the analyzing is that when I'm selling my asset, how much will I realize? That's what you can say we want to account for what goodwill.